Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Amplitude Inc. quarterly report. Amplitude Inc. offers a range of digital analytics services through its platform. The company's key services include Amplitude Analytics, real-time user behavior analysis session replay, qualitative user journey reconstruction feature experimentation tools for product and engineering teams, web experimentation, accelerated testing solution with reduced engineering support needs activation, personalized campaign and experience management guides and surveys, in-product guide, tour, and survey deployment using behavioral insights. Additionally, the company provides customer support services including initial implementation setup, ongoing support services, application training. The decline in Amplitude Inc.'s AMPL stock price by a little over -5.53% in the past year can be attributed to several factors. A significant drop of 33% occurred in April 2025 due to concerns about the company's revenue growth being inferior to its peers and its high price-to-sales ratio. Additionally, broader market trends also contributed to the decline. In October 2025, Amplitude's stock fell by 4% amidst a tech sector pullback, triggered by concerns about artificial intelligence demand and profitability. The stock also dropped by 2.6% due to investor anxiety surrounding potential new restrictions on software exports to China. Furthermore, the company's Q3 2025 earnings report showed lower EPS compared to the prior year quarter, despite exceeding revenue estimates. Analyst ratings were also adjusted, with Baird lowering its price target from $16 to $14. These factors collectively contributed to Amplitude's stock price decline in the past year. The primary drivers of revenue growth or decline are multifaceted and influenced by various internal and external factors. Market and economic conditions, such as recession and inflationary pressures, significantly impact revenue growth. Additionally, product innovation, customer satisfaction, and effective sales and marketing capabilities play crucial roles in driving revenue. Regulatory changes, including tax laws and global minimum tax rates, can also affect revenue. Furthermore, operational and management factors, like attracting skilled employees and executing a growth plan, are essential for sustained revenue growth. External events, such as natural disasters or cyberattacks, can disrupt business operations and impact revenue. In summary, the primary drivers of revenue growth or decline include market and economic conditions, product innovation, customer satisfaction, regulatory changes, operational management, and external events. Net income and profit margins. A shift towards recovery. The company's net income has shown a significant improvement from the previous year. In the 3 months ended September 30, 2025, the net income rose to $568, a stark contrast to the loss of $20,013 in 2024. However, for the 9 months ended September 30, 2025, the net income decreased to $30.25, still better than the loss of $71,878 in 2024. Profit margins have also undergone changes. The gross margin remained steady at 74% in both periods. Non-GAAP income loss from operations margin improved from -2% to -1% for the 9 months ended September 30, 2025. Conversely, operating expenses as a percentage of revenue increased from 102% to 104%. The increase in cost of revenue is attributed to higher third-party hosting costs, personnel and subcontractor-related expenses, and amortization of capitalized internal-use software development costs. These factors have contributed to the fluctuations in profit margins. Despite these challenges, the company's net income has shown a positive trend, indicating a shift towards recovery. The company is generating a significant amount of positive operating cash flow. The financial data indicates that in 2025, the net cash provided by operating activities was $16,989, exceeding the previous year's figure of $15,350. Furthermore, the operating cash flow for both the 3 months and 9 months ended September 30, 2025, were also positive at $4,957 and $16,989 respectively. This consistent generation of positive operating cash flow is a strong indicator of the company's financial health and ability to meet its obligations. The company's debt level has experienced a significant increase of 17.7% from December 31, 2024 to September 30, 2025, with a total increase of $26,500 $541. On the other hand, interest expenses have seen a substantial decrease, with a drop of $1,300 million, 34%, in 2025 compared to the previous year. This indicates that while the company's debt level has risen, its interest expenses have decreased significantly. Management's outlook. Focused on long-term growth with strategic investments, the company's management is committed to driving long-term growth through strategic investments in key areas. They expect fluctuations in financial results due to external factors, but remain focused on customer retention and expansion as crucial for revenue growth. The digital analytics platform is a key driver of success, and the company plans to expand its operations internationally while adapting to evolving laws and regulations. Management acknowledges potential risks related to sanctions and regulations in Russia and Ukraine, as well as tax liabilities and penalties. However, they are committed to investing in AI technologies to maintain competitiveness and modifying products and services to ensure compliance with changing regulations. Overall, the company's strategy is centered on long-term growth through strategic investments and adaptability in a rapidly evolving regulatory environment. The company's financial summary reveals that they have engaged in share buybacks, indicating a strategy to return value to shareholders through the reduction of outstanding shares rather than distributing dividends. There are concerns about supply chain disruption, primarily due to regional and global conflicts. The potential disruptions are highlighted on page 65, with the conflict in Ukraine, page 75, being a specific example. However, there is no mention of inventory buildup or supply chain disruption elsewhere in the report. That concludes the financial summary for Amplitude Inc. Feel free to comment below, and I will be happy to answer them when possible.